Right, we're now open for business.
Excellent.
Apparently we've got 70 people registered, Sean.
Oh, wow. Must be interesting.
Yeah.
Right.
Jen, can you speak as well, Jen?
Yeah, I can.
Yeah. All right, cool. So Sean, we've got Jen, our marketing manager, kind of lurking in the background as well. So if things start going a bit tits up, then she'll kind of let us know.
Sure.
That's a technical term.
Yeah, it's a technical term.
Brilliant, brilliant. Well, should I just give a bit of a rundown of Siebel's and?
Yeah. So you're kind of second on the list. I'll do a quick intro, and then I'll go through some stuff. And then,
fine, no problem. Yeah.
Good morning, everybody who's logged in so far. We'll give everybody who hasn't yet the traditional 2 minutes extra just to log on, and then we'll go. Right, I think we've got a quorum, so let's go with it. Welcome today then, I'm Dave Gibson. I'm co-founder of Blue Sky. If my voice is a bit croaky, that's because this is my 7th webinar of the week. So hopefully I'll make it to the end, and then I'm looking forward to giving myself a rest tomorrow. I'm joined today by Sean Foy from the British Business Bank, and he can go into a lot more detail on Siebel's, the business interruption loan scheme that launched this week as well through the British Business Bank. We have a little bit of an agenda. There's a Q&A box there for everybody, so bash your questions in. Please try and stick to the agenda if you can, but I'll react as best I can to whatever questions we get as we go through. So I'm going to launch straight in with the announcements that were made last night by the Chancellor, which were good news for some and not so good news for others. So for those self-employed, there will be a compensation scheme which is based on 80% of your taxable profits over the last 3 years. By self-employed, that is sole trader, self-employed. It doesn't include personal service companies, one-man bands, director shareholders who pay themselves through a combination of PAYE and dividends. There's still probably 2 or 3 million of them hanging around, for which there's kind of very little help at this moment in time. But I do know that there's representations being made by various bodies, both the contractors' bodies and by the Institute of Chartered Accountants and their tax faculty and the other tax bodies as well. So we're hopeful there'll be some movement there at some stage in the next few weeks, but there's absolutely no guarantees there whatsoever. So how does it work for self-employed people? Well, first of all, we already knew that any payments on account for income tax that were due to be made in July can be deferred to next January. That's automatic for those that are self-employed, although HMRC will kind of be in touch. that only applies to self-employed people. Again, direct shareholders that have had their income through dividends, that have payments on account to pay, that doesn't apply to them. Although, as the Chancellor pointed out, the time to pay helpline is still open for business for that kind of situation. You'll be contacted by HMRC. There'll be so they actually have details of who's self-employed. You will have to have put in a 2018-19 tax return, and that's kind of the trigger that drives the contact from HMRC. So anybody registered to be self-employed from the 1st of February misses out here. It'll be based on an average of your profits over the last 3 years, because they're aware of, obviously, that profits go up and down. If you've been trading for less than that, then obviously they'll average over less period than that. They'll consolidate a lot of that themselves, but the first payments are not expected to come back to you until June. So no cash until then, I'm afraid. It is for a 3-month period as well. So in effect, the June payment as it stands will be the only payment and will be backdated to March. Stand by for an extension to this scheme, as with other schemes knocking around as well. If I can then bring Sean into the picture. And Sean, can you give us an overview on CBILS, and also from the very limited and brief experience we've all had, if you can bring some kind of stories in as to how the lenders are actually acting and approaching this as well. Yeah. So practicalities as much as anything else.
Certainly, yeah. So good morning, ladies and gentlemen. My name is Sean Foy and I work for the British Business Bank. We're the UK Government's Development Bank. We're owned by the British Government and funded by the Treasury. And one of the main planks that we're involved with businesses at the moment with CBILS, which is the Coronavirus Business Interruption Loan Scheme, CBILS for short. CBILS 10 days ago did not exist. Was launched by the Chancellor, but actually came live on Monday, and it's been rolled out to 48 lenders on the programme as we speak today. The reason why it's 48 lenders today is we've used the rails of another programme called the Enterprise Finance Guarantee, or EFG programme. So the lenders who were on that scheme were already accredited, were automatically by us ported across to the new scheme. So when a business is approaching for funding, they go to the commercial lender that they work with. I would always recommend you go to your main bank. The scheme parameters are, it's anything from £0 to £5 million. It's an 80% government guarantee. So technically, the bank stands at potentially a 20% loss. There is some movement because what was happening was under 250, the lenders had discretion, that's £250,000, not to take a guarantee. And above 250, they had to acquire an understanding of was the business security or personal security available. What we were seeing was, certainly over the last 3 days, as the scheme launched and went live, most lenders were wanting to take a guarantee under 250. Certainly all the major high street banks, and when I mean the major high street banks, I mean the big five, including Santander. That position has been changing from yesterday through today. RBS are not taking guarantees now under 250. Barclays, and they've gone out and publicly stated that, Barclays appear to have moved their position and said they'll not do guarantees under 250. Metro Bank don't, and we believe the other banks are starting to move that position as well, including HSBC. So watch this space on the guarantee position. What you need to understand, though, if you're a sole trader or partnership, you are still personally liable anyway. This is particularly for limited companies. The interest rate is agreed subject to the pricing and risk model pricing that the major banks or funders use. So it's not something we have any influence over. A lot of the banks are offering capital repayment holidays. I certainly know Lloyds are offering 6 months. I have seen documentation, Barclays offering 12 months. The government is covering your interest and fees for the first 12 months, but clearly if you've got no turnover because your business is closed or your turnover has collapsed, or people are not paying you, clearly it's going to be very, very difficult to make repayments on those first months. So consequently, what I would suggest is if you're approaching a lender, you ask for a capital repayment holiday at the time that you submit the application. and have that conversation. In terms of volumes, I'm going to use the term tsunami. Lloyds, for example, on Monday, in the first 2 hours, had 2,000 applications. Friendly with the Lloyds relationship manager, and I spoke to him at length on Tuesday night. He had 12 CBILS requests, but he also had 20 requests asking for capital repayment holidays. So the principle behind CBILS is that a business was viable before coronavirus. So your business performed, ideally was profitable, ideally with your existing bank, that you ran your account in order within its facility limits, you didn't have unpaids or pressure on the account, you weren't loss making, and therefore CBILS is applicable to you because coronavirus has meant that your turnover has gone, or you've had to shut up shop, and you're looking at other schemes like the job retention scheme and VAT deferment and so on and so forth, but you need a cash bridge, you need funding and support to carry you over these next months. The scheme is available across term loan, overdraft, asset finance and invoice financing. We are looking to accredit more lenders, and we're bringing in resources to do that from different parts of the bank, but please understand we're not a commercial bank, so we don't have thousands of staff, we have 400 staff. Not, if you compare us to Barclays, who I worked for many moons ago, they have probably 40 or 50,000 staff. So what we're trying to do is bring in resource. I am one of that resource, and I will be helping with the accreditation process because I was a commercial lender for 29 years. So I'm deemed to know what I'm doing. Won't that be fun? But we're trying to get many lenders onto the scheme as possible to try and help, because what we're seeing is some businesses are trying to move from non-CBILS lenders to CBILS lenders. Really difficult for you to do that, and I would suggest it. I don't want to sound flippant, but you may be on a fool's errand, because to be perfectly correct, what we're seeing is most banks are focusing solely on their existing client bases. They do not have the resources, by and large, that's what they've said to us, to look at new to bank stuff. They just don't. Where you may get some joy is if you go beyond the major high street banks to smaller lenders like, and there's a list of lenders, and I'll say this with Dave and the team so they can send this out. There was a list of smaller lenders on the programme like Skipton Business Finance, British Enterprise Fund, UK Steel Enterprise, a whole host of other smaller lenders who may look at a new to bank proposition. I'm not saying they will, it depends on resources, because all of them are getting huge requests. What I would encourage you to do is, if you're looking for funding, is engage with your bank as soon as you're able to. Accept the fact they may not get back to you straight away because they're seeing such high volumes of requests on email and phone and through the web. Have that conversation. If they're prepared to assist you through nominal means, I'm not going to call it business as usual, but business unusual means, if you like. So, for example, I talked to a Lloyds client yesterday, and Lloyds had offered to increase that overdraft limit from the 150 grand up to, I think, around 250. Yeah, and he was saying, why can't I have a CBILS? He already had a lot of security lodged with his bank. Therefore, they already had a really good understanding of that business. They had lots of accounts managements that they were ready to go. I said, CBILS is really for a business that's perhaps a small limited company, for example. They don't own their business premises, they're in rented, they have very limited personal assets, and normally they wouldn't borrow from the bank. If they do have any facilities, they're relatively small, but a lot of people are probably running their accounts in credit and have self-funded. Their turnover's collapsed because of coronavirus, and they really need support, and that's where CBILS comes into play. What we've asked the banks to do is assess the viability around what happened before, not what's happening now. But if they ask you for financial information, the type of stuff they're going to ask you for, and I know Dave and his team would help you with this, is 3 years annual accounts or accounts from inception, ideally your management figures, and ideally any projections if you've done those. Acknowledging projections may be academic because things may have gone out the window for you from a turnover point of view. But try and help the lender by giving them the information and getting it across to them as quickly as possible. The worst thing that I used to find as a lender was people would come to me and I'd get the 1 year's accounts, I'd be chasing for the other 2, I'd be chasing for the management. They just don't have time to chase people for stuff. Yeah, get your ducks in a row, and also explain about what else you're going to do, and clearly articulate why your business has been impacted by coronavirus. The statistics around the fact I had 20 customers and I've now got one, yeah, or I had all these contracts agreed and now this has happened. Articulate that clearly to them so they have a full understanding of the circumstance. The people at the end of the day, they want to help, but you've got to give them the information to support the situation. In terms of support from the banks, we have, because this program is being rushed out, and our team who are based, called the Guarantee and Wholesale team, who worked on this program, worked through all of Saturday night, all of Sunday night, and all of Saturday. They didn't see their families for effectively 48 hours to get this program up and running. There have been mistakes. So sometimes we've found lenders quoting against the old EFG rules, for example, enterprise finance. That's not correct. Equally, if you've had any sort of state aid in the past, so if you've had an enterprise finance guarantee loan in the past, for example, de minimis or state aid rules don't apply. I've seen one lender quoting state aid. This is a scheme that is not covered under the state aid parameters. Well, it is, but it's under different parameters. So you don't need to worry about that. But literally, it's around engaging with your bank, but also other things you can do. And I know you're going to talk about a lot of the points, but if you have a term loan, can you ask for a repayment holiday? If they are prepared to give you higher facilities under existing parameters, I would do that. Clearly understand what you're getting into. The critical thing with CBILS is it's not a grant, it's not even a repayable grant. It is debt for the business, and the business is 100% liable for that debt. But I'd certainly approach a bank quickly, ask for the repayment holidays, because I think most of you would need that with little turnover, or else you're just going to be paying the repayments out of the capital that you borrowed. That doesn't really work for me. Ask for the repayment holiday. Happy to take questions, anything you have, Dave, or anybody on the call as well. And that's where we are.
That's really helpful, Sean. So yeah, if you've got any questions, guys, just bang them in there on CBILS. Sean, what you're telling me is consistent with what we've seen over the last few days. Yeah, I understand that the actual terms and conditions and guidelines were signed up at 4 o'clock on Monday morning.
They were.
For launch on Monday, and went through something like 22 revisions over the weekend. So it's totally unsurprising that there's still inconsistencies between the lenders, never mind between individuals within the lenders, and I'm sure that'll all shake out over the next few days and weeks. I was speaking to our own commercial bank manager earlier on in the week. We're with Barclays, and she said they've just had a total reorganisation there just to react to the floods of applications that are coming in here. But they and Alan Gowling at NatWest on LinkedIn this morning are very, very keen to point out that it is not the only solution, even from the banks. There's other facilities, and let them kind of guide you as to what's the best solution there for your business. I've got a lot of experience here. Yeah,
I'd agree with that. If you've got some kit on asset finance and they're prepared to refinance that and release more cash from, if you've got a fleet of vans or something like that, or a piece of machinery that's on and they're prepared, and there's equity in that, and they still actually we can do something on that. Yeah, I think that's fine. Always read the terms and conditions, understand the interest rate and things like this. But at the end of the day, they are genuinely trying to help, and they're not trying to take people's eyes out as far as we see. We are trying to understand volumes, and the first CBILS loan was done on Wednesday. I think there's more being done yesterday. That was done in the Northwest by a small lender called the Skipton Business Finance. So look at the lenders. To say there's 48 on there, and we are trying to accredit more lenders as well. There are some big lenders on there that aren't on CBILS, for example. Handelsbanken being one, Oak North, Allied Irish Bank, for example. But rest assured, we've been approached by. There's some of the lenders I didn't even know the names of. Yeah, I'm aware of them, but I didn't really know what they did or whatever. But it will be a challenge for us, but we will work as quickly as we can to get more lenders onto the scheme. But it's around engaging with your bank, but it's also looking at the other stuff that you can talk about this morning, job retention and so on and so forth. And I don't want to rain on your parade. I talked about those, but it's about having a bit of a battle plan for your business as far as I'm concerned. These are unusual times, and you have to try and look at every avenue, really, I think, for your business. Funding being one avenue in that situation.
I totally agree. It's so we kind of need a bit of a tapas menu of things that can help, and you kind of choose which bits are applicable.
I was thinking of the questions you sent across before. I know I think I've covered most of them, but one of the questions was around what sort of amount should you ask for? It's a bit of an unusual question in the sense that you should ask for what you think your business needs. The rule of thumb is the banks have different rules of thumb, but by and large, what we're seeing them use is 25% of annual turnover based on 2019 annual turnover. So very simply, if you had £100,000 turnover, the look would be 25k. That's the rule of thumb that most of the banks seem to be adopting. There's three different rules of thumb. One's 25%, one's related to wages, which is typically a couple of months worth of wages. One is around self-certifying liquidity. Most seem to be using the 25% turnover rule, as far as I can see. Yeah.
Okay, we had 2 or 3 questions came through, not related to that, as you were talking now, Sean. So I'll just kind of cover those off as we move into the job retention scheme side of things. So one, hi Pamela. Yeah, we had the same question yesterday. So if you're employed and self-employed, do you get the help under yesterday's announcement and help for the self-employed? The answer is yes, you do, provided your self-employed income is greater than your employment income. One regarding for directors, really. So this is for contractors, personal service companies, and directors of small companies, again, where you get a mix of salary and dividends. Can we claim salary through the job retention scheme? The answer is we think not at the moment. It's really, really difficult. A company must have a director to manage its affairs, and even if the company's not trading, then there's still some activity going on. There's some work going on with the bank. There'll be VAT returns to submit. There'll be webinars to attend, and that's all working. So as we get onto job retention scheme, we'll see that that's for people on furlough, and on furlough means that that individual does no work whatsoever for the business. And this is a point we need to keep reiterating, because people seem to sometimes find it difficult to understand. No work means absolutely nothing. No marketing, no telephone calls, no emails, no nothing. That is on furlough. So it's as if that individual has been actually made redundant, except it's saving them from redundancy and effectively giving them food for the mortgage and some food over the period of time this situation exists. Another question, any assistance available for startups and founders? Well, you're kind of in a similar position there. So yeah, we deal with a lot of tech and digital businesses. You've launched, you may have some investment monies there, you're kind of moving forward, but not profitable yet. There's absolutely nothing around other than maybe some of the grants around and the VAT deferment that I'll get onto later as well, and the job retention scheme for any employees that you have. That aside, maybe back to you, Sean, as well. So in that kind of situation where we have tech businesses that are started up, and very often it takes 2 or 3 years to get into profitability. So 2 year sets of accounts might look like carnage under normal situations, although you'd probably have a positive balance sheet with investment in there. Would the banks look at that?
Yeah, I think it's a really tough one for them, because if the business is loss making and perhaps in a cash burn situation, really difficult for them to assist. If the business has had, say, a reinvestment from, say, one of the fund managers, say in the Northeast Fund or on the NPIF fund, I would approach that fund manager in that first instance. Or if you've had it from another fund manager, have a conversation with them. What can they do to assist? I spoke to a fund manager yesterday, Mercia, and they've got a lot of, obviously, debt out on facilities to clients, and they're looking at stuff on a case-by-case basis. So if a business approaches them, said, look, the plans have gone out the window for certainly the next 3-4 months, however long this goes on for, what can you do to help me? They are trying to then assist with capital repayment holidays and other options as well. if you're a very small business and you've started up and perhaps you've self-funded, you've had funding from family or friends, there's always startup loan, because bear in mind it goes to 2 years. So there's always worth having a conversation with a startup loans provider like a Transmit Group or somebody like that. Could they do something to assist? Is there an option in that place? But I think Siebel's is a really difficult one for them to do anything, because there is that viability question. Was the business viable before? I accept that you're trying to build a business and you may have projections saying I'm going to be loss making for 12, 18 months, but it's a really tough one for the bank to then help in that situation.
Yeah, okay, that's good advice, Sean. We have seen both from NEL and North Star, for those of you with institutional investment, that they are open to conversations about giving repayment holidays in the case of convertible loans there. So have a conversation and see where that takes you.
Yes. Yeah.
There.
I would agree.
Yeah. Another question: is it likely we could apply for 2 tranches of funding, depending how long this goes on for? Or go for all in one go? I think, again, that's a great question, because we kind of don't know when the end point is. And
yeah, I mean, Siebel's as a scheme is open for 6 months initially. Certainly under the old EFG rules, you could get a facility agreed. You could draw so much down, and then you could go back and draw the rest down. I mean, I would be inclined to ask for what you need at this moment in time, and also based on what you look at in terms of numbers going forward, assuming a worst case scenario in terms of my turnover's collapsed to this, and I'm not going to see any improvement at it for X number of months, 3 months, 4 months, 5 months. Look at the worst case scenario, get the facility in place. If you then subsequently have to go back to the bank and ask for more, they've already helped you once, why wouldn't they help you again? That's how I would do it. But I think it's really difficult to ask a bank to say, well, actually, can I have something now and can I have something in the future, because no one can predict how long this is going to go on for. We're in lockdown for 3 weeks. If I was a betting man, I think that's just the beginning of it in reality.
I'm in agreement. I think we're stuck in our living rooms and back bedrooms for the next 3 months at least. And then
look at China, it's 3 months since, and they're just coming out of lockdown. It started early January. Mid-January in China, didn't it? So
I think the economic hangover is going to last us a couple of years, even if we get through the medical side of things this year. So
we're all going to be in hock as a country for the next 10 years, I think, on this. But that's what it is. Yeah, that's what it is.
Yeah. If I unmute myself, that would be helpful. So hopefully it's informative rather than the most professional of webinars. If we jump on the job retention scheme now, so the ethics behind the scheme is to support individuals who otherwise would have been made redundant. So let's kind of remember that it's not a pot of gold for everybody to dig in and fill the boots with as much as possible. Rather than making people redundant, you can apply through the job retention scheme. In which case, if you put individuals on furlough, in other words, they do not do any work for you as a business, the government will still refund you 80% of their gross salary. We believe that would we believe that would also include the employer's national insurance. That's detail yet to be confirmed. And we also believe there are discussions going on as to whether or not you can suspend pension contributions as well over that period of time. There's no need for you to top up that 80% to the 100% as well. So technically, it could possibly cost you nothing to effectively put somebody on the bench. And I think as a scheme, that's a good scheme. That's a really, really generous scheme. I think you have to look long and hard at how your business is going to go and how quickly you're kind of going into issues here. Some businesses obviously shut the doors and have dropped off a cliff. Others, it's going to be a more slow and gradual slide in the pit. But then, how do you anticipate coming out of this as well? So, if you are a cafe or a restaurant and you shut the doors, but then you reopen them, then you're probably going to be pretty popular. Trade hopefully will pick up fairly quickly after you're open. Whereas if you're business to business and there's been a slow slide down, then it might be a much more gradual pick up again going forward. So. It's kind of part of anticipating what resources you might need in the future as well. But what I would say is treat the scheme ethically. So if you put people on furlough, they're on furlough, they cannot work for you. They can't do 1 day a week. They can't answer telephones. They can't answer emails. Put them on the bench and kind of leave them there. And that's a better thing. That's more helpful to them as an individual than being made redundant at this point in time. We're looking also to see if there's scenarios where people can be put on furlough and then taken off again. That's yet to be clarified. So there's still a number of questions to go through here. So what I would say is just kind of keep watching our blogs and social media. And we'll have, I don't intend to do 7 webinars next week, but I certainly think that every couple of days we'll have a bit of an update just to see what I've learned over that period of time. And I'm sure most of this will be kind of clarified as time goes on. Just let me have a quick look at the Q&As here. Profit will start up with cash in the bank. We have a team of 20, evaluating how we can quickly reduce our staff costs whilst avoiding layoffs. If we furloughed half the team, can you help us understand the following? What constitutes sufficient proof that we need to furlough a specific person? I don't know is the answer to that. I think what I would do is, first of all, we need to take a step back and understand that existing employment law applies here. So you may not have actually the option of doing that, or you may need to agree that with the individual depending on the contract of employment. So I would absolutely recommend that you take employment law advice and speak to whoever's come up with your contracts of employment before you do anything. Secondly, if you're going for that, agree with the individual and put it in writing to them that they are on furlough from a specific date and send them home. I don't think that there's going to be much more proof needed than that. I think HMRC will be able to match claims against what's gone through PAYE and previous PAYE as well. They're more than aware that the scheme might be open to abuse. I don't think there'll be furlough police wandering the streets just making sure that people are not actually doing work when they've applied on furlough. But again, it's up to you as employers to behave in an ethical way, unlike certain very high profile employers that we've seen in the news this week around that. Cash in the bank is not anything to do with this. If the business is there and you don't need the individuals to work, then put them on furlough. Now do it. You know, even if you've got £1 million in the bank, but you only need 10 out of your 20 people, put 10 on furlough. Just extend that runway of cash that you have as long as possible, and just to, you know, assume and anticipate there's going to be further problems in the future. Question number 2 there, do we need to keep paying the staff ourselves after they've been furloughed, then claim back? Yes, that's my understanding and recommendation, is that you run the payroll as normal, pay them as normal, and then do a reclaim. And for any blue sky clients that we actually run the payroll for, we'll be, assuming the process lets us, and it seems it will do, we'll also be doing the reclaims on your behalf as well as part of that process. But you do have a cash flow hit there. We expect the scheme, the portal for the claims, to be up and running by the end of April. That again has been reiterated yesterday as a deadline. I would also expect there to be gremlins. HMRC and fast changes to IT systems don't necessarily go hand in hand too well, but I expect the first payments to come through in May sometimes. And again, if we get any specific dates, then we'll start knowing. We'll start to feed that back to everybody through social media. Number 3, must we respect notice periods in employment contracts when furloughing? Ask an employment law expert. So we're the tax guys, and it is a bit of a mix and match there. I know Jane Hart at the HR department is running as many webinars as we are as well. And Jane and myself might actually do a joint one early next week. We're talking about that now. I think that would be worth jumping on for you if that's the case. And for employees that we don't want to furlough but want to reduce hours and pay, in other words, reduce down to half a week and half pays or anything restricting us here. Again, that's more of an employment law question. I'm sure everybody's nice and helpful and open-minded and understand the situation now. You know, when things are back to normal, don't leave yourselves open to some kind of tribunal going forward. Are there any further questions on job retention scheme? Oh, yes. Do we know if furlough income and self-employed grants will be classed as pensionable? No ideas. Jamie, I'm not surprised that's come from you as well. Absolutely no idea whatsoever, to be honest. I know with the self-employment grant, that's classed as taxable income, but also you can continue working with a self-employment grant, unlike the furlough for employed people. I have absolutely no ideas on that. That's a brilliant question. I don't even know if they thought about that yet. Furlough, I would think, would count as pensionable income because basically the payment is being made as gross salary by the employer anyway. So that would be my expectation. But yeah, it's difficult to kind of be specific there. How does furlough work with regards to putting staff on furlough for the time being, then asking them back? We don't know, we're asking. Yes, absolutely. Not just keep a note, but you know, keep as many meticulous details as possible about when you're putting people on furlough. We don't know yet specifically what data is going to be asked for by HMRC when the portal opens. And like we said, if there are employment law issues further down the line, you really want to be protecting yourselves now by making sure you've gone through the right process and the right steps and documented it in the right way as time goes on. So certainly jump on the HR department webinars or whatever HR advisors that you're actually using. Will we send the link for the webinar for next week for us and Jane? Absolutely. We'll get that advertised when we organise it. So we're going to be speaking this afternoon. Oh, and then Jane's mentioned she thought these payments would be pensionable, and advised that as a government are paying this, advise people that they shouldn't opt out of pension. That seems like sensible advice. Yeah, I'm sure we'll get clarity on that as time goes on. I'll jump quickly onto SSP. The rules there haven't changed, but I'll just kind of reiterate what those are. So if an employee goes sick for coronavirus reasons, which also includes not just having coronavirus, but being told to self-isolate just in case, then they're entitled to SSP from day 1 rather than day 4 of the absence. And you as an employer can reclaim that SSP for the first 2 weeks of absence. There's nothing in the payroll software and no process yet for repayments of that reclaim. So as with the job retention scheme, just keep really meticulous, separate records of who's off sick and when and for what reason. We've kind of got techniques to be able to put the sick pay claim through payroll, even though it doesn't really do it. We kind of have to cheat on dates a little bit there, but be aware if they're absent for coronavirus reasons, you as an employee can reclaim the SSP. If they're absent for other reasons, you can't. Not being able to work because you've got to stay at home and look after the kids because the school is shut is not a reason for that. That's just normal parental leave, and that's between you and the employee to work out kind of what you're doing about that, whether people take holidays or unpaid leave or whatever. Again, whatever's kind of allowed from an employment law point of view. And always remember, existing employment law is still existing employment law, and it kind of trumps whatever's kind of being put through here. With the SSP, we're expecting, again, some kind of online portal to come along, I suspect, because we're talking about probably much lower volumes, much lower values being repaid. It's kind of a secondary priority to the self-employment side of things and the job retention scheme repayments. So it might be a little bit later before those repayments start coming through. Quickly onto VAT deferment. So if you are VAT registered, your VAT returns for the quarter ending February, March or April The payment can be deferred until the end of the tax year, that's April next year. The return still needs to be submitted on time, otherwise the usual penalties apply. And it's a deferment, not a grant, so you have to repay at some stage. I would suggest take the deferment anyway, and if you don't need the cash now, just stick it on one side and repay it later. Then you've got a little nest egg there just in case, and it might help you not go and ask for borrowing a little bit further down the line. That's a 3-month scheme, so it's only a single VAT return for now. That may be extended, as might anything else at the moment in time. If you don't want to pay and you pay on direct debit, cancel your direct debit. If you don't cancel the direct debit, HMRC will claim the cash anyway. You won't get it back if that's the case. If you're in a VAT reclaim situation, in other words, HMRC are due to pay you something, they will still pay. That's the good news there. Local authorities, we know that for tourism and leisure type activities, there's a rates holiday next year in the year, tax year 2020/21. That's been extended now to cover 1 or 2 other types of businesses, such as estate agents. There may be further extensions to cover other retail establishments as well. So there's a rates payment holiday that's automatic for those kind of businesses. There's also grants available, again in those same sectors. There's grants of up to £25,000 depending on the rateable value of the property. And then for any other business that have that pay rates, but pay rates under the Small Business Rates Relief Scheme, there's a £10,000 grant. That's not necessarily automatic. I know that details have been released to the local authority, so the local authorities actually process the payments. Certainly in the authority that we're with, North Tyneside, they've released an email address for you to contact them just to confirm your contact details for reclaim. Then they'll come back and check with you the bank details so that they make payments directly to the bank rather than sending out checks for you. We don't know when the payments will be made. We don't really know yet the full process. It seems like it's just a question and answer, and I know that North Tyneside have actually stuck some more resource in there to process claims coming through. So I'd be hopeful that would any grants of that nature would be the next month or 2. So a grant is a grant. A grant is not repayable. If you can get it, then get it. That's absolutely brilliant. Some more questions coming through. I'll just jump onto them. If they've been advised by doctors by the letter that they need to be off, yeah, if you've got a doctor's letter saying you need to be off, then that's fine. You should be able to claim. But no, it's only a 14-day reclaim. It's as simple as that at the moment. So there can be an SSP. So in your example there, Pamela, you said the doctors said 12 weeks. So the SSP would apply for 12 weeks, but the reclaim of the SSP would only cover 14 days of that. Same if they actually have the virus. Okay, so you file the VAT and cancel the direct debit, and then you've received a generic email asking how else you're going to pay. Well, just ignore that. They've obviously got processes and systems left, right, and centre, and you know, some of them don't talk to other ones. So you're going to get some kind of weird and wonderful communication from HMRC, I'm absolutely sure. Just ignore that. That would be fine. Natasha, even if we can defer VAT, if we have the cash in the bank, is there any harm in just paying it and avoiding a larger payment at a later date? No harm at all. If you're absolutely supremely confident that you've got the cash to take you through under normal circumstances, then do it. If you've got the slightest bit of doubt about that, then maybe I would say don't pay it yet, but just bank the cash, you know, ring fence it and make sure you don't use it for anything else, and just pay it later. Then if the worst happens and something unexpected happens and you need to go borrow some money later on, you've kind of got something there that might save you from some borrowing. If I'd submitted a VAT return before the 20th of March for period ending February, will the deferment still apply? Yes, the deferment applies for VAT quarters ending the end of February, the end of March and the end of April. And and yeah, you've just submitted your VAT return a little earlier than some people, that's fine. John, hi. North Tyneside Council can still not confirm that soft play companies fall into the leisure category. I don't know why not. That's idiotic of them. Do you know if there's a way to appeal? I don't know yet. I know, but I do know there's going to be further softening of the rules coming through. So just kind of keep an eye out on that, John. Finally, would we be able to claim the grant as a co-working space which has had to close? The grant is available if you pay rates under the Small Business Rates Relief Scheme. If you pay rates for that, then yes, you can, is my understanding, and if you don't, you can't. Okay, next thing I want to just run through finally is so we talked about borrowing, and we talked about grants, and we talked about financial aid available by governments, but there's other stuff you can do to keep your own house in order as well. I'm sure many of you are doing much of this already, but if I just run through some good practice, and this is all good practice anyway under all circumstances, never mind the current circumstances. So hopefully when I come out of this, we'll have a new breed of business owners that really understand the importance of good cash management and daily cash management in the business. So first of all, absolutely do a forecast. There's a free forecasting spreadsheet available from our blog page on our website. Also for clients, we're offering 3 months free subscription to a product called Float, which is a cash flow app that links into Xero. And you can either take that and tackle it yourself, and that'll cost you nothing, or you can get us involved, but obviously there might be some charge for that. On that, Float is a really good thing, so just have a look at that on the internet. But really try and have a think about how this is impacting your business. So I would say, is your income dropped off a cliff, but will it kind of recover sharply again, or is it a gradual slide in and a gradual slide out kind of thing? Just have a think about how your customers and clients are behaving, and how they will recover, and how well they will see your service or product as we come out of this as well. Secondly, yeah, if you are B2B, you invoice out and you're waiting for your cash, get your cash in. Have really strong data control. Chase the cash, chase the cash, chase the cash. The longer an invoice remains unpaid, the more likely it is to turn into bad debt. You don't want to be suffering from that any more than you need to. Just get the cash in as soon as you can. Decent data control is absolutely key to any business. Tech business, or if you're doing research and development, we've been approaching a few clients already. So for those where we normally do research and development tax credits at year end, let's do the very best we can in partnership to try and bring that year end work forward. So we can submit the R&D claim earlier and you get the cash back for that earlier. We are assuming that HMRC are also going to be beefing up some resource around that area, because I suspect there will be a larger number of claims brought forward, and obviously they may suffer some resource issues around that as well. But you know, look to keep things done on a daily and monthly and weekly basis, and make sure that we can attack that year-end work good and early for you. Have a look at your discretionary expenditure. There's just like people in personal lives, then if you look at businesses, there might be stuff kind of wandering out monthly on a direct debit that you don't really use anymore, or that provides you no value going forward under the current circumstances. Ask yourself, do you really need to spend that money? You know, it might be SaaS subscriptions, it might be magazines, it might be books, it might be anything. Just really analyze the expenditure that you have, and kind of call a halt to anything that's not going to add anything to your business over the next 3 or 4 months. Looking at your biggest costs, which tends to be people and premises. Well, people we've kind of covered, I think, on JRS. You know, use what you've got. Maybe restructure what you have. Look at, do people need different roles and responsibilities for the next few months to kind of recalibrate the business that you've got to take best advantage of what might be available for you. But again, with premises and expenditure, if you are renting premises, have a word with your landlord. It might be that you can reduce or defer some rent payments. If you're in a service accommodation office like we work, go and try and barter with them, drop the number of desks that you're working through. You know, just do anything you can to reduce expenditure around there. Are you using contract labour? Then, you know, they're obviously, that can obviously be cut as well quite often. Grants we've talked through. If there's a grant available, just take it. That's brilliant. The other help, use it when it seems sensible for your business, and kind of use it as part of like say a tapas menu of help for the business. Get totally on top of your bookkeeping and reconciliation. If you don't know where you are today, then your forecast is going to suffer as well. And we're really keen to push people along so that we're having a proper daily reconciliation. Even if the number of transactions going through has dropped, then, you know, that's obviously gives us an opportunity to get caught up on that, and then reappraise at every trigger point within there what your forecast is. And look for your runway. Sean mentioned runway earlier on. For those that don't know, that's effectively the amount of time you've got before you run out of cash. And it's a lack of cash that kills businesses. So all of these tips are there to help you extend your runway. I had a conversation with a tech client at the beginning of the week. They were just due some institutional investment to drop through. The company, the investor dropped out. And we looked at it and they had a 3-month runway. They were going to run out of cash in 3 months. But literally in a 20-minute conversation, we ran through some expenses, recalibrated some of those. We looked at the year end, brought that work forward, which we could do literally in the next month, which brings some R&D cash forward. And we've extended a 3-month runway into a 6-month runway. They have some relationships, which means that they're comfortable. They can get some private investment in. That gives them enough time to get that organised properly and up and running. And it's actions like these that could be the difference between kind of survival and not going forward. Getting away from cashing a little bit, just understand your business some more. Is this an opportunity to review your overall processes and resources? Use it as an opportunity to get efficient. Look at how you do things, look at what you do. You know, pivot your business, evolve your business. Maybe it means less income, but more profit, you know, and it's the number at the bottom of the P&L that's important, not the number at the top. You know, who cares what your turnover is? It's like, you know, how much profit you're going to make, how much cash you're going to generate, you know, how much, you know, what are your survival techniques here? If you're doing stuff and not getting paid for it, why are you doing it? Kind of stop doing that and do stuff that you will generate income from. And then finally, you know, be realistic and don't forget the future. You know, there will be an end to this. Really plan through to make sure that you've got the resources to springboard forward again when the time comes. If that's kind of retaining good staff, which is what the job retention scheme is absolutely brilliant at. Even if you can't pay them now, you know, it means that, you know, realistically they're going to come back on board when the time comes. You know, be canny with your cash. So, you know, try and come out of it with as much cash or as little debt as possible at that point in time. You know, if you're kind of still treading lightly and your competitors have got that £250,000 loan millstone around the neck that they have to repay, then that's going to hit their cash flow going forward. You're going to have the resources to kind of move forward with things. So really kind of look at what you're doing there and look at things in the round. And that's my top 10 tips. So one more question from Neil. Do we think the government will be looking at assistance for company directors? I have already argued that. You've been arguing with your 18-year-old daughter who wants to go out. Yeah, I certainly have empathy with you there, Neil. And I suspect you don't necessarily win those arguments as well. We don't know. We know the government has had a bit of a downer on people who get paid like this, which is kind of much of the audience. You know, we know that we're kind of bringing forward the IR35 changes. That's gone back a year again as well. There's a lack of understanding as to how small businesses work of this nature. But so certainly there's been no help to date. But there are, as I say, some representations being made to the Treasury by the likes of the Institute of Chartered Accountants Tax Faculty, by the chartered taxation bodies, and by other contractor bodies as well. And, you know, there's a couple of million of you out there. You know, there's quite a loud voice there as well. I can see why, even if they have the right attitude, I can see why it could provide difficulties. But I don't see why they couldn't certainly consider a scheme similar to what they've identified for the self-employed now on an 80% rule. So I think that time will tell, and obviously we'll be shouting really, really loudly if we hear anything else in that area. So very nicely, we're coming towards the end of the hour, and I think I've pretty well run out of topics to talk about, and I think we're pretty well run out of questions there. Does anybody else have any questions before we go? I think I'm certainly happy to hang around a few more minutes if necessary. Or any questions for Sean before he disappears? And 9, 8, 7, 6. I'm an accountant. Can I lend you a tenner, Kevin? No. All right, everybody's saying goodbye now. All right, thanks everybody for joining. I hope that's been useful. Give us some feedback. Let us know what else you want to hear about, and really try and have a good weekend, everybody. And thanks very much to Sean for guesting as well. No, you've been a hero. All right, thanks everybody. Bye bye.
Glad to help. Take care now. Bye now. Keep safe. Keep safe.